If you're new to the channel, please consider subscribing. Also, if you haven't joined us yet, please go to fxntrading.com, create a free account, and join us in our Telegram group where we have a large community of traders that are helping each other trade and becoming better traders. All right, guys. So with that said, let's go ahead and get started with this video today. All right, guys. So what I wanted to talk about this during this video is a couple things. Really, two main things is how can we keep the trades as long as possible, and then also I wanted to share with you why it's important to essentially always make sure that you have a take profit in place. So I took a couple trades the other day on Euro CAD, Euro USD, and you can see here what the actual trade was. And essentially the trade was basically trying to go to the 200 EMA like you see here. And as you can see, we actually made it there. The problem is that I forgot to put a take profit in place. I put a stop loss, but I forgot to put a take profit. So what ends up happening is, of course, now you're in a situation where, you know, you forget about the trade. At least I forgot about the trade. And now it's next day. Now, thankfully, the trade still the very next day, you know, went back in my favor, but it did retrace well over like 60 pips almost back. So it was a positive, you know, went all the way down to the 800 and then it retraced. Luckily, though, like I said, it went back in the correct direction. So very important that when you put in a trade, make sure that you actually go ahead and also fill in the take profit, because if you don't, you know, your actual trade could go ahead and go down to where you're targeting it to go down to. But if you don't have a take profit, obviously, then you're going to miss out on potential profits and guarantee yourself you know, that actual profit coming into play for you. Now on this one here, Euro USD, this one the plan was for it to go down again 30 pips, but during that particular day, you can see it only went down actually about 23 pips or so on this specific day. Now again, this was another trade that I completely forgot to put my take profit in, and so of course I had to deal with the same kind of issue where it essentially went all the way back and retraced to the very beginning. So luckily it didn't go all the way back up and take me back out. So I was very lucky and fortunate enough that, you know, the very next day the price still continued to go down, and so now of course you see I have a take profit in place. So now the question is, I want you guys to see what I do on both of these trades to show you basically how we can extend, you know, and get basically as many pips as possible on these two trades. Okay, so we can use it basically as a learning experience now. Okay, so we basically, you know, have a situation where, hey, we weren't able to take profit automatically, but now, thank goodness, you know, the trade went in our favor anyways the next day. And now we come into a situation where we can go ahead and start to think about how can we extend these two trades to basically get the maximum benefit from them, right? So as you can see, essentially what I try to do is I try to, you want to basically try to give it room to breathe, but at the same time you want to basically protect your profits. Now you can do this a couple ways. If you're using MetaTrader 4, MetaTrader 5, you can go ahead and use and put in a trailing stop. Now a cool feature that I did not know was added to TradingView was that you can actually go ahead and you can use a trailing stop now on TradingView. So it's a new feature. It was actually hidden in the actual trading panel. So it is definitely a new feature. and it's something that you can use also now on TradingView. So what you can do is you can put in a trailing stop, and basically all the trailing stop does is it's essentially going to protect your profits. So if you set it to, like, let's say 10 pips, it's basically always going to stay within a 10 pip range of where price is. Now, the only bad thing about it is that, let's say it moves 10 pips and price starts to come back up, it's not going to move back and always keep that distance of 10 pips. So it only moves basically down as price is moving down within 10 pips. But if it moves back against you, then that trailing stop basically stays still. So it only moves forward 10 pips at a time or so. But anyway, so on this particular trade, the only thing I'm trying to do is basically trying to make it last as long as possible. Now, a lot of things go into this. So in these two examples, we're talking about basically the beginning of the U.S. session almost. So because of that, you have to take into effect that you could have a reversal happen during the U.S. session, and so what you would want to do, essentially, or at least what I try to do on this, is I try to give it probably like around a 10 pip stop or 10 pip range as it continues to go down. So for example, if this is going to, let's say the numbers on this is 1.46200, then my stop is basically 1.46300, and so forth and so on. So if it moves down to, let's say 1.46100, then I'll have my stop losses at a 1.46200. So it always, the last three digits is always like about 100 apart. And so I found that that typically will give it enough room to breathe, and it'll continue to go down until there is a reversal that happens, and then ultimately it just takes you out on the trade. But as you can see, it just keeps going and going down as we get closer here. Now, a couple things that I want you guys to notice is the fact that just because it's going against me right now doesn't mean that I want to get completely out of the trade, because as you'll see, price is essentially just going down, even though price is going down, even though it's appearing to want to retrace. And so you'll see me start to move the start to move it down as price goes down. And I'm very aware of now, obviously, of what's going on, because I want to make sure that I can protect or get as much profit as possible on this specific trade. So I'm just going to go ahead and let this play out here so you can see how it takes me out of the trade, basically. But essentially, as far as numbers go, if you can use a trailing stop and use a 10 pip trailing stop, that should give you basically enough room for it to really go down. If it's gonna reverse, and I think 10 pips is plenty of room for that to play with, and essentially give you the space that you need so you can maximize essentially how many pips you can get on every single trade. All right, guys.